Hello, I'm Mijun, a professor of American Securities Law. Let's start today's big stock news on April 9th. We welcome you to Mijun, who is consistently maintaining the integrity of American stock investors. In times like these, when the market conditions are not good, there is a high possibility that investors will sit in front of the stock price screen all day and scrutinize the movements of the stocks. But in fact, if we touch the bottom of the market and wait like this, the period until the bottom comes can feel very long. So in fact, in cases like these days, it can be more effective to forget about stocks for a while. Not completely giving up on stocks, but distancing yourself from thinking about stocks and observing from afar. In that sense, I sometimes wonder if my daily updates on the United States situation through the Meiji One broadcast are really helpful to you. I'm trying to structure the broadcast with as much objective content as possible. Even so, if you feel that watching the Meiji One broadcast is more difficult than watching my broadcast, I suggest you take a break from the Meiji One broadcast for a few weeks. I would like to advise that forgetting about the United States market for a while is also a way to wait. Today, I would like to read some comments left by our precious viewers. Today is a bit special. Well, at the top here, I've hidden my identification a bit. It's so hard, I want to take a sleeping pill and sleep for 3 years. You can see a comment like this, right? What's the next comment? Suddenly Biden can take responsibility. Suddenly Biden appears. And another one, retiring from the United States stock market. Before retiring to the United States stock market, please go to Han River first. You left such an interesting comment. These 3 comments have a common point. They are all comments that came up at the same time. Of course, there were much worse trolls than this, and there were comments that caused a huge commotion. I think only this much is left because I deleted somewhat reckless comments. These 3 comments were all posted on the same day, and that day was October 12th, 2022, when this video was posted. Well, why is October 12th, 2022 important? That was the bottom of the bear market, that was the lowest point, and from October 13th, the United States stock market continued to rise for over 2 years, creating a bull market as we know it. But recently we've started to see similar kinds of comments. If you look here, he casually mentioned that he's retired from life, which is strikingly similar. He went to Han River first. So, when people who are having a hard time like this come out, it becomes like this. In the end, we can interpret it optimistically that the bottom is not far away. Today, there is a comment that makes me sigh as I read it, and I want to read it to you. It's a post left by someone who uses the identification Mario Manola. The difference with the corona outbreak and other points is that I paid property tax as advised by the landlord and paid 20% in cash. Previously, I was desperate during the crash and had no cash, so I was just hoping while doing portfolio rebalancing. However, now that I have cash, it's not just defense but also offense, so it's a bit better psychologically. Also, in the past, half of my principal was gone during the crash, but now I'm keeping the principal and even have a little profit, so this point is also better than before. Still, it hurts because I lost more than 13 million won from the highest profit. It's not like I'm whining about it. I hope to reevaluate this period as a time of opportunity in a few years, while focusing more on physical checkups, exercise, reading, travel, and family time. Mr. Mario Manu, who left such an important comment, you have represented my heart. Thank you so much for sharing. If you all spend time maintaining a healthy mind like this, in the end, it seems like this half year will also come to a successful conclusion. Then let's start with today's United States real-time news prepared for April 9th. I don't want to wrap up today's broadcast, but I will try to summarize from yesterday's United States real-time market. At a glance, the bearish trend continued even yesterday, especially there are hardly any rising stocks among tech stocks. Broadcom and Arista Networks were the only ones showing a bit of green, and the rest of the stocks were all soaked in red for the day. What's the reason for the rise of Broadcom, one of the top picks in the semiconductor industry? The chief executive officer announced that the company would largely repurchase their own shares this time. That's why it's recorded as a sector that's somewhat positive. Yesterday, the Dow Jones fell 0.84%, the S&P 500 dropped 1.57%, and the Nasdaq plummeted an additional 2.15%. It's a very bad 4-day bear market. You can see it like this. As the stock continues to fall, the market's breadth has narrowed to an indescribable extent. It has fallen this far. Currently, we are recording 5:16. Therefore, most species are in a bearish phase. Momentum has weakened. This is what we can speculate. Next is the distribution coefficient, but the distribution coefficient is not easy either. As you can see, it went up almost to 50. It's at 48.82, and that means it went up to around 53, 54, which was over 50, recorded in March 2020. The fear we felt during the pandemic has now risen to almost the same level. Next is the Fear and Greed Index. The Distribution Exploration Index also fell to 3, a level I have never personally witnessed. This shows how much fear is currently pervading the market and that extreme fear is completely dominating. It seems like this is how you should see it. The market score provided by Chistak has also dropped to the fear level. It's at 18, and if you click here where the market score is mentioned, you can see the message. The current market is engulfed in excessive fear, so what is the message that Chistak is talking about? It seems possible to interpret historically that a low-priced volume calculation has come to find an opportunity to buy aggressively, an opportunity to buy at a low price that may not come again. Here are the United States stock market results. Yesterday, excluding 3 items, the rest all fell. Broadcom was the best, rising 1.23%, and Bitcoin was the worst, falling 1.21% to 77,190. Next, Inode Data also ended with a plus 0.82%. The rest of the stocks all ended in red. Negative 0.24 Vistra at 0.49, Palantir at 0.67, Uber at 0.87, Meta at 1.12, Nvidia at 1.37, Google at 1.40, Credit Technology at 1.70, Celestica at 2.19, Nextracker at 2.37, Amazon at 2.62, Taiwan Semiconductor Manufacturing Company at 3.28, B2 at 3.37, and Tesla at 4.90. Lastly, MicroStrategy ended the worst, falling 11.26%. For those of you who are investors in Korea, you usually go to bed after the United States market opens, so you might not know, but yesterday's market was, in fact, a roller coaster. Why? Because at one point it surged over 4% based on the S&P 500 standard, but later it ended in the negative. I will briefly read an article about the historic failure of the United States stock market's rebound attempt. Well, there is a reason why it ended in such a historic failure yesterday. Why? Because there was confirmation from the White House that a 104% tariff on China would be implemented at 12:01 anti-meridium, and then the United States stock market plummeted like a landslide. You can see it like this. Tuesday ended in a rout. The dramatic reversal of the stock market turned into a historic failure, and the shocking sell-off triggered by President Trump's drastic measures continued for 4 days in a row. The S&P 500 closed down 1.6% after a 4.05% gain during the session disappeared. This is the largest intraday swing since October 14, 2008, a period that was most painful during the 2007 to 2009 financial crisis, when the largest gain disappeared. How often does it rise more than 4% during the session and then close in the negative? It's virtually unprecedented historically, hence the current discussion. Based on data since 1978, it's the first time in United States stock market history that the S&P 500 index has recorded a loss of more than 1% after rising more than 4% from its session high. So we can speculate how many investors were disappointed yesterday, and we can discuss this in detail. Overall, it was a turbulent day. The Dow Jones Industrial Average rebounded to its highest point of the day, up 1,461 points. It showed a plus up to 3.85%. However, the closing price fell over 400 points, recording the biggest drop since April 2020. The National Association of Securities Dealers Automated Quotations Composite, which includes tech stocks, closed down 2.3%, but during the session, it showed a plus of up to 4.6%. And then, it absorbed all these fluctuations. As a result, it is said that the record of the largest surge since 1982 has disappeared. After the Treasury Department announced that it would impose a 104% tariff on Chinese imports, the rally lost its momentum in the afternoon trading. The trade war has intensified even more. China, which had previously imposed a 34% retaliatory tariff, vowed to fight to the end in response to Trump's tariff measures. Therefore, for various reasons, the current attempt to reverse the United States stock market has completely failed. This is how it can be summarized. However, there is one uncertain part. The market fell sharply yesterday, but in the end it rose slightly and rebounded. The most fortunate part is that the lowest point was 4,911. What does this mean? As I mentioned in yesterday's broadcast, the most important technical low point right now is 4,850 based on the S&P 500, and it is extremely important not to fall below 4,850. Why? Because the 5-year uptrend line is here. Therefore, in order to maintain the uptrend line, it is extremely important that we do not fall below 4,850 and continue to bounce back, and we can interpret it in that way. Well, and another thing, the highest point in 2021 was 4,850. Therefore, there is currently a very strong support line, and I would like to say that it is important to maintain such a technical support line. Recently, due to the Trump administration, the United States stock market is experiencing a rapid decline. At the same time, various investment institutions are now adjusting their positions. The distribution of stagflation is growing. Today, I will try to review a slightly negative article content with you all. The investment institution called Vanguard is the first to come out. Vanguard has adjusted the forecast for the United States economic growth rate, considering the passive impact of Trump's tax policy. Inflation expectations have risen. They made two negative changes simultaneously. The economic outlook was revised downward, and the expected inflation value was revised upward. Joe Davis, Vanguard's global chief economist, comes in here. He is now predicting that the United States gross domestic product growth rate will drop to just 1% by 2025. So, traditionally, the United States gross domestic product growth rate has been reported by various organizations to be over 2%, but now even 1% seems difficult. This is how he adjusted his forecast. And this is about 1% point lower than his previous forecast for Vanguard. According to Vanguard's new forecast announced on Tuesday, President Trump is expected to reverse some of the tariffs. However, despite this, there is a possibility that the effective tariff rate will temporarily rise to 25% by the end of this year, and Vanguard predicts that it will eventually settle at around 18% in the future. And even in such a scenario, an effective tariff rate of 18% is a significantly high figure compared to January. Because based on the January standard, the average tariff rate for all imports in 2024 will not exceed 2.5%. Raising tax rates significantly in a short time frame can be viewed like this. It is also said that tariffs have a high possibility of causing inflation. Joe Davis predicts that by the end of 2025, the annual inflation rate will rise to nearly 4%, revealing such a negative forecast. If that happens, it would be more than 1% higher than his previous forecast. Originally, he was expecting about 3%, but no. Inflation will surge to over 4%. That's why he has revised his current forecast. The unemployment rate could also rise to over 5% by the end of the year from the current 4.2%. We are sharing an uncertain outlook. The stock market plummeted rapidly after the president's announcement on April 2nd. The S&P 500 index has fallen more than 15% this year, and the tech-heavy Nasdaq index has dropped 21%. Davis is yesterday. In a new memo yesterday, the tax department shocked the market. That much is clear. However, one thing is not clear: how long the announced level of tax can be maintained. We are now in a recession, and together we are in a crisis. So it's a moment of decision whether to go into recession or not. It's an extremely dangerous moment. That's what I'm talking about. Other asset management companies and bank analysts are also adjusting their forecasts and raising the possibility of the United States economy falling into turmoil. For example, the team of economists at JP Morgan Chase raised their recession risk forecast from 40% to 60% on April 4th, and economists at Goldman Sachs lowered their economic growth forecast and adjusted the probability of a recession in 12 months from 35% to 45%. And what about UBS yesterday? They lowered the S&P 500 target index from 6,400 to 5,800, a decrease of about 9%, and the forecast for the domestic total gross domestic product growth rate in 2025. They lowered it to just 1%. So, currently, many institutions are drastically adjusting their economic growth forecasts and also their target stock prices for United States stocks. You should see it this way. Of course, some analysts and financiers are still hoping that the Trump administration will find a way to cut taxes through negotiations. Jim Goldman, the chief investment officer of the Centrala Financial Group, admits that the economy is weakening, but he insists it's not as bad as some people think. According to Goldman, consumer spending is still strong, the unemployment rate is low, and the most recent employment report was positive, so the hard data is still alive, he says. Therefore, because there is still some power left in the economy, it's not a completely desperate situation. He is now giving this positive talk. However, according to David of Vanguard, he hasn't gained confidence in the economic recovery yet, but the combination of economic activity and price increases that can be systematically adjusted is increasing the possibility of stagflation. Stagflation, to reiterate, is a combination of stagnation and inflation, where stagnation refers to a slowdown in the economy, and inflation is when prices rise. Therefore, the Trump administration now has a high possibility of triggering both of these. It significantly raises the risk of stagflation, which can be seen as negative. Sarah Devereaux, who works at Vanguard and is responsible for the bond division, also agrees. She emphasizes to investors that the Federal Reserve may struggle in a stagflation environment, while pointing out that this is part of the negative impact. Taxes are like the sword of Damocles. It is expected to destabilize the labor market by stimulating inflation in the short term and hindering growth. However, the Fed is likely to be cautious about raising interest rates proactively due to the risk of facing higher inflation in order to adjust to these dual tasks. Therefore, many investors now expect that if the situation worsens, the Fed will step in, but it's harder than they think. The reason is that it is extremely difficult for the Fed to take action such as injecting money into the market or lowering interest rates due to concerns about inflation, as the possibility of causing inflation is high. We've read together the negative forecasts that various investment institutions have been telling us about. The future is not determined yet. Therefore, the future of the United States stock market will be determined then, as various economic indicators are announced in the future or as the policies of the Trump administration change. You will see it this way. So from our investors' perspective, we can't know what's ahead. All we can do is respond. You should see it this way. There is a very crucial article about several response options that current investors can take, so I would like to share it with you all. It would not be an exaggeration to say that the stock market has been unstable since last Wednesday, when President Trump announced the global tax increase. It was not just unstable, it was the worst situation. As of the close on Tuesday, the S&P 500 index has lost more than 12% of its value since the announcement. It's normal for investors to seek answers in such an environment. However, the uncertainty of the macroeconomic situation, changes in global monetary policy, and Trump's next move, etc. Instead of focusing on things we can't control, it's better to understand what we can control. So in the current situation where most of the markets are in turmoil, from our investors' perspective, there's nothing we can do, of course. That's the hardest part. Therefore, from an investor's perspective, there's no need to worry too much about things we can't control. As I mentioned earlier in the broadcast, in a market like this these days, in fact, one way could be to step away from the stock market for a while. Why? There's nothing you can do about it. However, this article tells us 6 strategies that we, as investors, can take. One of the best strategies to communicate to customers in times of great change is to simply sit back and do nothing. So, if we've lost all our money at this point, doing nothing could be one of the drastic measures we could take. It could even be the best one. However, it's human nature to want to do something to stop the bleeding. That's right. Because of this nature, when there's a problem like this, we strive to solve it. Especially male investors tend to have this nature stronger than female investors. Men usually strive to solve it when there's a problem. Therefore, male investors should be very careful right now. Why? Because if we can't find any other solutions, ultimately, there's a high possibility that we might end up selling all our stocks due to our nature. Well, let's try to explore various responses that we can make together. First is low purchase. It's an obvious statement, but a low purchase is one of the best decisions a long-term investor can make. The price has dropped significantly over the past week. The best time to invest in stocks is when the market is plummeting and investors are nervous. This has now proven to be a historical fact time and again. So if you have cash on hand to invest in the market, now is exactly that point. If you miss this decision, you will regret missing the opportunity when the market rebounds. Therefore, for those investors among you who still have cash left, now is the time to invest that money and make additional low-cost purchases if you see it this way. The second is investment automation, which means investing mechanically. If you're considering automatically depositing money into your investment account, now is the time to start. The market has fallen significantly over the past few weeks, and the situation could remain unstable for several months until the conflict is resolved. So how does an automated portfolio add funds? Because it eliminates emotions from investing, it's incredibly effective to create such automated investments when the market is in such a downturn as it is now. As I mentioned earlier, I have a regular income. It would be great to combine this with it. So, for example, if I have $1,000,001 right now, buying 100,000 won every week could be one way to do it. We've looked at the second advice, which is to eliminate emotions and automate investments in this way. The third is rebalancing, which refers to the process of adjusting investments to maintain a deliberate asset allocation. And in practice, this means selling off some assets, like bonds, and buying other assets, like stocks, to return to the original target portfolio. Let me explain with a simple example. Among you, those who are a bit older, seniors, probably have a lot of bonds in this portfolio because you need this money for living expenses. So if what I have is about 50% bonds and 50% growth stocks, well, people like this, now the growth stocks have probably fallen a lot more. So for example, if suddenly this balance is disrupted and the bonds become 70% and the growth stocks drop to 30%, then you have the opportunity to adjust this back to 50-50. I can explain this with a simple example right now. Next, measure the rough type. Many investors, while not the majority, make up a significant portion of all investors. Most investors are holding a portfolio of wealthy assets. No matter how much we learn and really analyze carefully, even if we bought stocks, if we bought about 20 types, there are many types that do not move as I want, more than 30-40% of them. Therefore, investors want to reduce losses by selling such types. However, they can't know the most appropriate time to sell. However, generally, when the market has fallen like this, it's the appropriate time to sell. Why? Because when things are going well, blue chip stocks, good stocks, they all fall at the same time. When stocks fall simultaneously, you can seize the opportunity to invest in the ones that have fallen more drastically. Viewed from this perspective, it can be effective. While accepting the loss, you can diversify your investments to decrease risk. The profits are currently in a bear market, but if you can reinvest in other investments with higher potential for gains in the future, it would be a good opportunity. That's how it's being explained right now. Next, there's a discussion about taxes. Just like now, when the market suddenly falls, there are types that turn negative, and there's another point in selling these types. You can fix the loss to elaborate on the tax benefits. What does this mean? For example, if you sell some of the stocks that have fallen now and later in the year, when the United States market rises sharply in the second half, there will be no such stocks that benefit from it, and the stocks that benefit and the current negative stocks. If properly combined, you can significantly reduce taxes. That's one way to look at it. Even a few months ago, if you look at the comment box of Mr. Miziwan, there were a lot of comments like, "How do you do the transfer tax, Mr. Miziwan? The transfer tax is too big and it's a bit burdensome." That was a good time. So let me say it again. I don't worry about taxes. Why? Because we should be grateful for making a profit from stock investment itself, and it's a pity to pay taxes because the profit is too much. In a way, I personally think this is a bit of an overreaction. Well, when the bear market comes like this, if you hedge a little of the invested capital that you have seen losses, you can receive the benefits of taxes later. You should see it this way. Well, it's mentioned as an opportunity to reduce inheritance tax. In the case of families with high net worth, a bear market can be a tremendous gift. Why? From the perspective of such an investor, the asset value has fallen tremendously right now, with any decent type falling by 30%, 40%, and so on. If you transfer such stocks to your children at this time, you can use less of the gift tax limit. Therefore, it is very useful because you can transfer more wealth in the future, and that's why it's coming out now. I think it would be good to keep this in mind. Again, I would like to add my personal opinion through the words of Mi Hoon. When I think about it, there are people who say that it's not a loss until you sell, and it's not a profit until you realize it. I think it's a very irrational thought. And I believe that we can increase our wealth through stock investment only by overcoming such irrational thinking. Why? Because at the point where the market closes yesterday, our past return rate is already determined. We should see it this way. Just because we didn't trade yesterday, it doesn't mean that the investment result will be different. If it was minus 20% until yesterday, this 20% drop is what is confirmed. We start fresh today. That's the right way to see it. It means maintaining the same portfolio without any loss or gain. When the new market opens today, it means betting on the rise again in today's market with the same stocks as yesterday. We must remember this fact. What are you talking about? We bought a stock called A and made $1,000,001, but it fell 50% to 500,001. But because I didn't sell this 500,001, I have no loss. There are people who calculate like this, but that's not right. Why? Because you have to sell this 500,001. Because we have the opportunity to buy other stocks. So if you hold on to a stock that has fallen by 50%, we are giving up the opportunity to invest in other stocks. Therefore, unless we are sure that this stock is better than other stocks, it would be better for us to calculate that keeping a stock that has fallen by 50% is a good thing. Every investor is given the opportunity to change the type of investment they are betting on with a few clicks every day. Not every day, almost every moment. But the fact that we keep holding the same stock means that this stock is the best. Therefore, the fact that we do not take advantage of the opportunities given to us means that there must be a certainty that such opportunities are not needed. And such betting today is not based on the average until yesterday or the profit rate until yesterday, but should proceed with the most promising stock at the current point today to increase the probability of success. The two things we always have to ignore are the average price and my rate of return. We need to regularly check our portfolio, but there are two things we should ignore. The first is our average price per stock, and the second is the return on investment per stock. These two factors are irrelevant to the investment company's value, our average price, and profit rate, correct? It simply has to do with when I bought these stocks and how much I bought them for. The value of the company and its future prospects have a mere 0.0001% correlation. Therefore, if we make investment decisions based on this, the likelihood of failure is extremely high. Remember this part. The single reason why we need to regularly check our portfolio is quite conclusive. In the midst of changing trends over time and the relentless evolution of companies, is our portfolio really filled with the best choices? That's why we need to keep checking this over and over again. The world is constantly changing rapidly, and the companies we invest in are also evolving every day. So these companies might have been the best choice a month ago, but there are cases where they differ from my current thoughts when I look at them now. That's why we need to check and review our portfolio every day. You should see it this way. We can't just leave it as it is when our precious money is invested in stocks where the rate is falling or the supply is insufficient. So in a bear market like now, staying as it is can be one way, but at the same time, it's important for investors to check again whether the stocks I'm investing in are really the best choice. I will wrap up today's broadcast with today's United States stock market outlook. Recently, many of our viewers have been critically evaluating today's United States stock market outlook. As you can see, a user named Housewife also left a comment saying, "I really appreciate the additional United States expert interview. It's great." And another user named Still also did. They said, "I really enjoy the United States stock market videos you show after the broadcast these days," in a positive comment. So it seems that many of you are extremely curious about what experts are saying about the current situation in the United States stock market. I will try to maintain this format. Today's forecast for the United States stock market is from Fred Strauss. As many of you know, Strauss is an investment expert with the most conservative mindset in the United States stock market. Recently, he has continued to speak positively, but his position has become a bit complicated. For example, he predicted that if interest rates rise, the United States stock market will immediately plummet. As many of you know, after the announcement of the interest rate hike on Thursday and Friday, the United States stock market dropped by 10%. So the situation has become extremely difficult. We will continue to monitor whether there is still uncertainty about this, and we will try to listen to the opinions of experts together. That's all for today's broadcast. I sincerely thank everyone who stayed with us until the end. And tomorrow is Thursday, April 10th. The time I will be broadcasting is a bit unstable. If the situation is good today and there is no other news, I think we should take a break from broadcasting tomorrow. If there is any important news, I will make a very short video to greet you all again. Oh, we will all fight together until the day we retire as United States stock investors. Have a happy day. Thank you.
The head of research at Fundstrat said in a new memo to investors that he would like to apologize because the conditions of the tax crackdown day were much worse than expected. Sally is with us now. However, if you try to handle direction and duration in the same way, how are you going to do that, comes the response. In this case, too, it seems like they couldn't predict that such high interest would be generated. To some extent, it's a shock that couldn't be predicted. Despite that, do you think that Trump and Putin's aftermath started to show based on yesterday's standards? For example, the signal could be Nasdaq reaching a record high.
Yes, that's correct. The market is under downward pressure because it has almost fallen 13% during the 2 trading days. The stock market and economy are in a severe downturn due to the tax department, among other things. I think the rebellion is in progress. Mark Newton, the technical strategist, sees this as a technical rebound. I think it can recover to about $500. The problem is that the fundamental clarity is insufficient. So it's not at a level where we can say the situation is okay now. So it's a difficult situation to be sure that we're going back to the top. In the short term, we judge that the market is showing a certain range of fluctuations. Recent adjustments are also being seen as an overreaction. The president showed a move to return to negotiations, and there was an attempt to convey his intentions to the public. In the market, there is also an interpretation that Trump and the Fed are quietly reviving. The government does not want to prolong the market's sudden instability, which is seen as the background to its operation.
You often say that you usually look at the market based on technical analysis. This time something unexpected happened, which is unusual for you to predict, right? From my perspective, it seems like a completely unexpected situation occurred when a high level of volatility that I could not predict at all was announced. What do you think is the reason for your decision to enter this negotiation now? However, the situation is fluid, and negotiations could be suspended again tomorrow. An unpredictable development occurring again cannot be ruled out. If that's the case, wouldn't it be possible to reduce the impact on your set target of 5,500 points?
That's correct. We've been having conversations with many investors since Thursday, and one thing has become clear in that process. Investors felt that this level of scrutiny was not simply complicated and difficult to understand, but it was undermining the basic trust structure of self-ownership. The belief that the promise of self-ownership has been broken is growing in the market. Everyone knows that business needs stability and predictable rules. Many companies moved their supply chains out of China in 2018, but this tax could potentially tie up billions of dollars again. This situation has caused a great shock to the market and a breakdown of trust. However, if a clear direction is provided, it is possible to restore trust. After the current crisis, there is a possibility that Lewis's reputation can return to its previous level. However, the reality is that we cannot be sure what is needed for that clarity. I feel that this process will take time. My colleague Tom Drumark said that this situation is similar to 2011, but I don't think that opinion is bad. I'm talking about the point that it might take some time for the market to regain trust.
However, Tom, the market reacted greatly yesterday to the incorrect rumor that the government would suspend for 90 days. The market has lost trust, but it seems that many people are still desperately hoping for a resolution in this situation.
Yes, I think so. Perhaps it was a kind of experimental attempt, but it had an effect. In other words, if there is a friendly, flexible approach in business, it can cause a tremendous response in the market. For example, measures like tax relief for borrowers can really help restore confidence. Ultimately, the biggest hit in this situation is the companies and their capital investments. Companies need to increase their returns on invested capital, which not only reduces harm to shareholders, but also affects all employees working in the respective companies. So when I think about that ripple effect, I can understand why the market is causing a severe downturn. Of course, there are many aspects that can be fixed. However, it is clear that it will take some time to resolve.
I don't think the administration planned that experimental attempt to be so effective, but what is clear is that they were vigilant. They probably thought it could happen in just about 5 minutes. It showed that it could bounce back from an 800-point drop. One more thing to ask, Tom. So we are conducting negotiations with 70 countries. And finally, as Scott Gersten said, if China really starts a trade war, the language coming from both sides could actually sound like a real war. If we are negotiating with many places and the situation with China is getting worse, if the Trump card reflects that situation, will it change the calculation of the ton for the Trump card?
7 countries account for about 70% of the trade deficit. Other countries, excluding China, such as the European Union, Japan, South Korea, Vietnam, Canada, and Mexico, seem to be moving in a direction that can receive benefits. In fact, this can create a more favorable situation for the United States. I think there is a possibility that we may not be able to completely solve this issue with China, so there might be attempts to rebuild the supply chain or isolate China. The market, I believe, can adapt if that actually happens.